This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms, radio, TV, YouTube, and Bloomberg Originals. It is Tuesday, June 16th. Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. A lot going on, and I want to go to a headline and a story that just crossed the Bloomberg. This has to do with the U.S.-Iran deal set to offer Iran broad financial gains specifically to end a war, and that includes the right to sell oil immediately and tap a $300 billion development fund.
Yeah, the U.S. Treasury Department will issue waivers for exports of Iranian crude oil, petrochemical products, and their derivatives immediately after the memorandum is signed. The U.S., too, will lift its naval blockade, and the two countries will work to ensure that traffic in the Strait of Hormuz returns to its pre-war level within 30 days. This latest story out on the Bloomberg terminal just moments ago, Jonathan Tyrone, Daniel Flatley, and Josh Wingrove reporting for Bloomberg News.
We should point out that under its terms, the U.S. Treasury Department will issue waivers for exports of Iranian crude oil, petrochemical products, and their derivatives immediately after the memorandum is signed. You know that the two are officially set to sign an agreement on June 19th, talking about the U.S. and Iran specifically. That is expected to happen in Switzerland. So that then paves the way for 60 days of talks to end this war between the two for good and put strict new limits on Iran's nuclear program. One person familiar with the matter said technical details were still being worked out. As we've reminded you, the devil is always in the details, suggesting precise language could still change. So it's a little bit of a moving agreement still.
Yeah, and just remember how long it took the JCPOA to be negotiated over a decade ago. And this is moving at we think at a different speed. But like you said, Carol, devil's in the details. I think for a lot of people, what happens to our assets and our personnel in the Middle East when they leave, will signal that something is finally done. And
we should point out that neither side has released the complete text of the agreement, and U.S. officials have given conflicting accounts of when all of this might happen. So it's on the Bloomberg. We're going to continue to track it and the reporting done by the team here at Bloomberg. In the meantime, we've got a rally that sent stocks to the brink of an all-time highs, faltering on this Tuesday on the eve of the first Fed meeting that will be chaired by Kevin Warsh.
Yeah, we'll have more on that in just a few minutes. That Fed two-day policy meeting getting underway just this morning. I saw Mike McKee in the office. He was heading down to Washington, D.C., but a little stop here at Bloomberg headquarters before he does that. Carol, speaking of stocks that are moving higher,
right? The
rally for SpaceX continues. It overtook a Mag 7 peer in market cap. The company cementing a $60 billion deal.
SpaceX still, the news continues. Plus how the financialization of GPUs, all the AI chips that we keep talking about, may be a nascent risk to the economy and markets. It's a column that caught our attention early on this morning.
I promised we'd have more on the Fed and on the economy. Our Fed and Rates Roundtable, Bloomberg's own rates strategist, Ira Jersey, joining us, along with Greg Peters, the co-chief investment officer over at PGIM Fixed Income.
All right, we mentioned SpaceX. We're going to come back to it. We've got the SpaceX investor that wants to help you get your hands on the hottest private tech companies. The CEO of Powerlaw Capital Group is stopping by. All right, lots going on this Tuesday. Let's jump on over to Charlie Pellet with a check on the trade. Charlie.
Hey, thank you very much. I got you covered. You mentioned SpaceX up now by another 10%. That's on top of yesterday's surge. And of course, the day before when it had its IPO, the trading session before, when it was up more than 19%. But to underscore, SpaceX right now up by about 10%. Got to begin with crude oil. Tim and Carol just talking about that West Texas Intermediate, 75.78 a barrel, down 6.2% right now. Barrel of Brent back below 78, back below 79, 78.73 now, lower by 5.5%. The Dow higher up 441, up by about 0.8%. All of this ahead of the Fed meeting tomorrow, the Fed decision, and of course Kevin Warsh's news conference. Yeah, we got it for you live on Bloomberg Television and Radio. S&P trading lower. It is down now by about 0.3%. We've got the NASDAQ Composite Index down 142, drop there of 0.5. The NASDAQ 100 lower now by 1.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, lower now by 3.3% with a 10-year 4.42%. Spot gold up $29 the ounce, up by about 0.7%, 43.41 the ounce. And West Texas Intermediate crude again down 6.2%, 75.75 a barrel. With the price of oil moving lower, oil majors down as well. ExxonMobil down 0.3%, Chevron down 0.7, ConocoPhillips lower now by 1.6%. And again, SpaceX, big story as it overtakes Amazon as the 5th largest publicly traded company in the world. SpaceX up 10%, Amazon lower by 0.1%. I'm Charlie Pellet, Carol and Tim. That is a Bloomberg Business Flash.
Which made me want to look at Microsoft because that one is a $2.9 trillion market cap. And right now, SpaceX is still about just shy of $2.8 trillion. So we'll see whether or not it overtakes that one as well.
I'm going to just keep saying this, Carol. I know you're going to get sick of it. But the thing about Microsoft is it has earnings. The thing about Amazon is it has earnings.
Details, Tim.
And when I say earnings, I mean profits. Earnings. We say, SpaceX reports earnings. Well, they're going to report numbers because they might not have earnings.
All right. Remember that little known company, Amazon, that wasn't
they had tiny profits that they were reinvested back into the. Anyway.
Okay.
We're getting ahead of ourselves here.
All right. A reminder that we continue to say this is Elon's world. We're living in it. We have seen shares of SpaceX continue to shoot higher. The stock is up 3 days in a row, about a 60% gain. It did take, as we heard from Charlie, Amazon's market cap. It is homing in on the market cap of Microsoft as well. Some news, the company formally agreeing to take on the AI-powered coding assistant Cursor. It's a deal that values that startup at $60 billion, with Cursor investors to receive SpaceX stock based on the implied equity value of Cursor. We wanted to know why Cursor is important enough for SpaceX to spend billions to buy it, why it needs it.
All right, with us is Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. He joins us here in the Bloomberg Businessweek studio. Mandeep, it's not surprising to people who've been following this, given that the company had the option to buy Cursor at this value. But remind everybody where Cursor is when it comes to sort of like the codexes and the Claude codes of the world, where it sits within the coding agents for LLMs.
I mean, look, a lot of people thought it's a wrapper for the frontier models, and it doesn't have its own model. What changed with Cursor was they actually trained their own model called Composer. And when you look at, how they're generating revenue, yes, they use Anthropic and OpenAI models, but their own model is far less in terms of token costs versus, using the frontier labs. And that's where it is an asset that everyone wanted to acquire, I would say, and Elon just got ahead and bid up quite early.
Well, so what exactly are they buying?
So think of Cursor as software that can help you code anything, similar to what Anthropic Claude does as well. But in the case of Cursor, you have the option to call whichever model you want, whether it's Anthropic's or OpenAI's or Cursor's own, and they give you the ability to price it according to the task and how much you want to spend on a task and not consume a lot. Like token maxing has been a term that has come up a lot. Why? Because the frontier model tokens are very expensive. You could end up using a Claude model and consume all the tokens and be out of budget very quickly. Whereas if you're using a Cursor model, you can do a lot more with that model because the tokens are cheaper. You just have to figure out the appropriate task, whatever you want that coding agent to do, according to the model that you want to use.
Okay. Is this also about SpaceX buying up kind of engineering and data talent?
Absolutely. I mean, and I'm curious to see how many people actually end up staying after the acquisition, because, anytime you see a large company buy an asset like, a Cursor, a high-flying company, there are always people who just can't adjust to the culture and they end up leaving. And so I'll be curious to see the kind of retention. And we know even with XAI, the attrition was quite high. I mean, we had a lot of news flow just around, the leading engineers in XAI leaving. So it would be interesting to see how much retention they have when it comes to the Cursor side.
If a lot leave, is that problematic for SpaceX?
I mean, right now it's all about kind of maintaining your model at the frontier. So look at what Claude has done. 6 months back, they were behind OpenAI. Now they are at the frontier. Why? Because they did something on the training side that OpenAI wasn't able to keep up with, or Google Gemini, for that matter, wasn't able to keep up with. And that's where engineers are very important when it comes to the training side of the equation.
I know you've got to spend, $60 billion here. So I'm thinking, Tim, you got to spend, I guess, to grow into your valuation?
Well, that's the question. The valuation right now, about $2.8 trillion for SpaceX as a company. Carol mentioned it surpassed Amazon. It's creeping up to Microsoft right now. I was kind of joking, but not really, about earnings, because this is a company that, at least in the roadshow, was valued at 100x 2025 sales. When you guys over at Bloomberg Intelligence, sharpening your pencils, getting the Excel documents ready, what does this valuation signify to you?
I mean, this is unprecedented in terms of, the multiple. And I've mentioned about Palantir in the past. To me, it's very similar in terms of the valuation as well as the retail interest. And look, when you have a unique asset like SpaceX is, where they create a new market on their own, there will always be a lot of excitement as long as they are able to, maintain that enthusiasm around the sector. The valuations will hold. But as the moment they start disappointing, that's when, this will come down really hard. And it's very hard to time these things.
Yeah, if it disappoints too much, right, it's going to come down and then it's going to have to prove itself. Mandeep, we have to jump. A lot of news going on, but thank you. Big, important story. Mandeep Singh, Bloomberg Intelligence, Global Head of Technology Research, joining us right here in studio. We want to get back to a story that just crossed the Bloomberg. We've kind of laid it out for you. Iran set to receive broad financial incentives as part of its agreement with the United States, including the right to sell oil immediately and tap a $300 billion development fund. And so what we're starting to do, we haven't seen the details, right, of what is in this agreement, but our own reporting team, they have found out.
Nick Wadhams is Bloomberg News National Security Team Leader. He joins us from Washington, D.C. Nick, what did you and the team find in this memoranda of understanding?
Well, what we sort of see for the first time, I mean, that we'd seen a lot of broad contours around this deal, but we get it all in one package at once. And what you see here is something that maybe isn't quite what the Trump administration has been messaging over the past several days. So there are immediate financial incentives that Iran gets once it signs this memorandum of understanding, and that's expected to happen on June 19th. And chiefly where that comes is the U.S. lifts all of its waivers on the sale of Russian oil, so they can basically have full access to the market to sell oil that is such a crucial part of their economy. And then from there, it's a whole series of other steps of financial incentives where sanctions will be released eventually. You would have Iran would get access to its frozen funds that are locked in overseas accounts, and also very crucially, you would see a broad sort of re-welcoming of Iran into the global economic community. So there's this also a $300 billion development fund where the U.S. would sort of help oversee that. So, in a lot of ways, what the U.S. gets in response is essentially, a commitment from Iran not to pursue a nuclear weapon, but it's something that will further stoke concerns from a lot of Trump's Republican allies who essentially have expressed a concern that this amounts to a financial giveaway to Iran. Yeah,
and the president has been so critical of the JCPOA, Nick, for many years. And I'm wondering, the financial element of this aside, the nuclear part of this and the uranium enrichment part of this, how is that different than the JCPOA that came into being during the Obama administration?
Right. So, I mean, what President Trump is essentially trying to do here is argue that the JCPOA put time limits on Iran's ability to enrich nuclear material and put various constraints on its program, but didn't ultimately prevent it permanently. So there were certain limits on Iran's enrichment capacity, for example, that came off after a certain number of years. So what he's looking to do is essentially put a permanent stop on that ability. But this memorandum of understanding is not the place where that will happen. So as the memorandum makes clear, it starts the clock ticking on a 60-day process for bigger negotiations that would address a lot of those details. But, the devil is really in the details there. And, it should be fair to the Trump administration. They argue that Iran will not get a lot of these financial incentives until it meets a lot of those benchmarks that the U.S. will put forward. The challenge there, of course, is that none of those agreements have been settled yet. There's no indication that Iran will commit to what the U.S. wants. But in the meantime, it is getting access again to the oil market, which will be a huge, huge financial boon. I mean, the sanctions on Iran had been in place for a long time, but it was able to get around them with some of the oil sales. So that's a big plus for Iran.
Who's in the driver's seat? I asked Nick because if Iran at some point just says, I don't like this, I'm just going to close the Strait of Hormuz again, right? Like they have that power. They've learned, right, in this incident or this war that they can do that and kind of shut down the world. So I feel like it sounds like anything could happen at any time down the road.
Well, I mean, Iran certainly has a better understanding of the degree of the leverage that it has in terms of being able to shut down the strait without a lot of assets, because you don't actually need to attack a lot of those ships. You just need to make shippers understand that it's too risky for them to go through the strait. So it has a lot of leverage there. Should be said on the other side, of course, and one of the reasons why Trump's supporters in Congress, Republicans, are saying, hey, this might not be so bad, is Trump can bomb them again at any time if he wants to. He has shown the willingness to attack Iran before, twice, and his supporters say, listen, if these talks drag on for too long, you've got that 60-day limit, he'll just attack them again. So you do have a situation where both sides do have some leverage. Of course, the issue for President Trump is he really wants this war to go away, especially with the midterms coming up, because it's such an unpopular conflict.
Right.
So he's going to be reluctant to do that bombing campaign again.
Which makes me wonder, though, if he's also been on the phone. We know he has, or he's certainly been pretty vocal about Benjamin Netanyahu, because Israel, has its own mission. And we've seen the continued bombing of Lebanon. I mean, if that isn't put to an end, is this all at risk?
Very much so. I mean, the draft MOU that we have says in the very first paragraph that the two sides agree to end their war, including in Lebanon. Of course, the issue there is that the U.S. isn't at war in Lebanon. It's Israel that's going after Hezbollah across its northern border, but Israel is not a part of the U.S.-Iran agreement. So a lot of that will really hinge on President Trump's ability to get Benjamin Netanyahu to do what he wants. And, of course, recent weeks have shown very clearly that President Trump doesn't always get his way there. That Netanyahu has shown a great willingness to go after Hezbollah, even if it makes things complicated for President Trump and upsets Iran. And that's been one reason why, in some ways, this deal has taken so long to come about. So a lot of question marks here that we're going to need to be sorting through in the weeks ahead.
We know geopolitics is tricky. We get it. Hey, Nick, thank you so much. Nick Wadhams. Yep, he's Bloomberg News National Security Team Leader in D.C. I highly recommend you check out our story. It's on the Bloomberg and at Bloomberg.com, just what our team has learned in terms of the agreement between the two nations.
Well, in terms of what's moving markets over the last few months, Warsh certainly has done that. Also, at the center of it all is AI spend, especially when it comes to those semiconductors.
Yeah, this goes to a story that really caught my attention on my morning read in. It was a macroscope column. It's written by Bloomberg's Simon White. First line in the column, the financialization of GPUs is a nascent risk to the economy and market. So let's get to it. Simon's been kind enough to stick around in our London News Bureau over at Bloomberg. It's a little bit later there. He is Bloomberg macro strategist. Simon, thank you so much. I think drove my team crazy saying, I want to do this story this morning. I want to do this story. History doesn't repeat itself, but it often rhymes. And that is true, too, for financial markets. Walk us through your thinking when it comes to GPUs, what we're seeing, the spend, the build out, and what's going on in markets.
Oh, thanks for having me. So these are the latest innovation in finance, which, as you said, there's some early parallels, if you like, to what happened in the early days of the financial crisis. But essentially, we're talking about here the center of the new economy, the AI economy, is these GPUs. So they're much more expensive than CPUs, and that is the kind of the architecture that AI needs to run on. And you need to build these vast data centers, and these cost a lot of money to fund. So we have this new innovation, which is debt backed by these GPUs. So, the financial markets are doing what it's done before. It did it with mortgages in the years up to, 2008, where it takes something that is essentially illiquid and untradeable and makes it liquid and tradable. So it's very early days. We've seen something in the region of maybe only a few billion of these deals over the last few years, but this year to date so far, there's already been $65 billion of these deals. So relatively small amount, but some of the deals are getting really big sized. So you've got neoclouds, as they're called. So companies like CoreWeave that provide GPU as a service, and they need to basically get the funding to build these massive data centers. And the way they're trying to inveigle investors is to collateralize the debt with the GPUs. So they're basically, the GPUs they've got, they're basically collateralizing the debt. And this is, as I say, the aim to try and draw in investors and make them more comfortable with the risk that they're taking.
Yeah, and this comes we now have initial trading volume strong for NVIDIA's new bonds. Prices have remained near where the $25 billion worth of debt was sold at. This is something we talked about, these new 7-year notes. We talked about it yesterday, but it's trading today.
Simon, you mentioned it worked with mortgage-backed securities up until the financial crisis, and we all saw what happened then. I don't want to say that that's going to happen again. We have no idea, but is that what happens in a cycle when these new products emerge?
Well, there's a great quote from Jim Grant, I think said it. He said, progress in science is cumulative, and in markets and finance, it's cyclical. And so over time, again, we see the same things happening over and over again. So 100%, I agree with you. It's very early days. But given where we've seen what Wall Street tends to do, it takes actually quite a good idea. So it makes a lot of sense. Financialize these very expensive assets. They're expensive to run. They have a lot of downtime. So that really makes the whole thing much more efficient. But unfortunately, Wall Street has a tendency not to be able to hold back. So, we'll see again what actually happens here. But, if you start to have a situation where you've got this debt-backed GPUs backing this debt, as I say, we have a forward curve already. We're about to have a futures market in GPUs. That means you can essentially short GPUs. That will be on the cards lately. So you get all the parallels that, we took a mortgage. A mortgage used to sit on a bank's balance sheet. There's very little you could do about it. But then they started to package it into these MBS and then repackage them again into CDOs and all the other alphabet soup of things. And it's not impossible over the coming years that we see something similar happening to GPUs, just given the amounts of money involved.
Hey, when we think about asset-backed securities, mortgages had homes, declining in value, as we know. But having said that, GPUs, we often talk about this cycle where, they get better, they get improved. People want to buy the newest, the latest. So those assets that are backing actually are declining in volume. Is that part of the problem?
That's a very key point. Essentially, you've got assets that are kind of rotting, if you like, very fast. So the GPUs, there's Mike Burry, the famous short investor from The Big Short, ironically, in the housing crisis, did a big piece on depreciation of GPUs, and he is basically, his idea is that a lot of the hyperscalers and people that hold vast amounts of the GPUs are not really accounting for their depreciation. So it's a very controversial subject, but regardless, whether it's 3 to 4 years they last or it's 7 to 8 years, they're very fast depreciating assets. So that means that you have to have these very aggressive pay down schedules on the loans. But then you've got an extra risk, if you like, right? Because you've got this, they can very quickly become technologically obsolescent, like a house. It's very difficult to suddenly go, we've got a much, much better house. All the houses that exist already are obsolescent. Whereas obviously with chips, that's not impossible. Someone comes up with a new way of using them. Or the other side of the thing is the demand. We've already seen some demand. Your previous guest talking about Cursor,
right, pointed
out token maxing. Already we're hitting some sort of demand destruction. So all these things really add to the risks of something that's, very new, but inherently very risky.
All right, good stuff, and something to certainly throw into the narrative as we continue to cover certainly the AI spend and AI build. Simon, again, thank you so much. Simon White, he is Bloomberg macro strategist, joining us from our Bloomberg News London bureau. All right, let's get back to the markets.
Yeah, and we're going to hear from Charlie Pellet in just a second. And when we come back from Charlie, we're going to talk FOMC meeting tomorrow, new Fed chair, all what to watch for, the challenges facing that new Fed chair, Kevin Warsh. But Charlie is standing by in the Bloomberg Businessweek studio. He's watching these markets closely. Hey there, Charlie Pellet.
Hi, thank you very much. Charlie and Bloomberg, we got you covered. Let's begin with SpaceX because that stock keeps on going. Day 3 of trading, we're up by 10.6%. Dow, look at that, a record 52,100 right now. Will we close above 52K? Right now, we have got the Dow up by about 0.8%. S&P, NASDAQ 100 index, all in the red. 0.3% drop right now on the S&P. NASDAQ down 0.6%. NASDAQ 100 index, all of those big tech names down by 1.4%. Your tenure, 4.42%. Gold up 0.7%. 43.40 the ounce, while West Texas Intermediate crude 76.02 a barrel, down now by 5.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. 24 hours from now, yes, indeed, we'll be on a plane, but we will also have the first rate decision under the new chair of the Federal Reserve. We're talking about Kevin Warsh. Every word of his press conference will be poured over for signs of how he will lead the Fed, and more importantly, how markets view the most watched central bank and its independence against the backdrop of a president, a White House who is not shy to put pressure on the head of the U.S. Central Bank.
Now let's get to our roundtable. Back with us, we got Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income, on set with us. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey joins us from the Bloomberg Princeton Bureau. Okay, so the backdrop, the macro here, the U.S. economy and rates. What are top of mind, or what is top of mind for members of the Fed that began meeting today? Greg, I want to start with you.
Well, I think it's inflation, the path of inflation, and what to do about it, quite frankly. It's very simple and very difficult at the same time.
But has that story changed? Has that story changed in recent days as oil prices have come down?
Well, it's not as acute, but you're still well away from their target. There's still inflationary pressures across the system. That's not abating. But it does make it a little easier, all else equal. I mean, let's be fair about that. At the same time, they have work to do. And I think the easing bias that the Fed had just doesn't really hold water here in an environment where you're growing quite steadily and inflation is well above target.
Ira, come on in on that. Same thing in terms of the backdrop. You know, here the Fed kicked off its 2-day meeting this morning. What do you think is top of mind when they are talking about the economy and the economic backdrop?
Well, I think first, Greg's right, that one phrase in the statement is going to be gone, right? So the statement that kind of hints that they might do another rate cut. Otherwise, on top of mind is what is the future forecast for inflation, but also this growth story, right? There are members of the FOMC who are going to debate and suggest that growth is very uneven and that there's a lot of people in the lower income part of the income distribution that are not doing as well as some others and who are in the higher income areas. And you have seen that, right? We call it the K-shaped economy, uneven economy, whatever you want to call it. So I think there will be kind of a group of hawks and a group of doves. And when we get the minutes from this meeting, I think it's going to be pretty clear that there are these two camps of hawks and doves and not probably a whole lot of neutral in the middle.
What would be a shocker, Ira, for you that we might get from Kevin Warsh? Or do you think his whole goal is to be calm, steady, don't shake things up too much?
Well, I think at this point, he'll be pretty diplomatic overall, and he won't just shake things up. He's still going to be getting to know all of the other members of the FOMC and trying to maybe sway them a little bit toward some of the activities that he wants to do, like shrinking the balance sheet or reducing the level of communication. I think the big shocker is if any of those things were to happen at this meeting, or he hinted at it, hints that it's coming soon at the press conference after this meeting. For example, if he announces, hey, we're only going to go back to quarterly press conferences like we had prior to the pandemic, that would be a pretty big surprise at this point, I think.
Yeah, Greg, I see you nodding. Jump on in here. Is there a chance that happens?
Well, there's a chance of it happening. I think Ira's right. The markets will be very surprised. So there's an intense focus on this meeting, and there's a very good chance that nothing's going to happen, right?
Which is a good thing.
A lot of stuff could happen. Good chance nothing happens.
So I think it's about building credibility first. And so if he comes out really hot out of the chute, talks in a very dovish way, I think the credibility factor crumbles quickly, and that's not a good longer to medium term.
Well, Ira, you have to go in a minute, so we want to bring you in for one more at least. The credibility question, he has to be credible not just with Wall Street, but also with President Trump, who has an expectation that rates will be lower at some point very soon. How does he do it?
Yeah, I'm not sure he can, and I think that that's going to be a big challenge for Kevin Warsh. You know, he did espouse, you know, at his nomination hearing that he is going to be independent, right? He said that he's not a lapdog, right? So he noted that that he's going to do what he thinks is the right thing. And of course, you know, we also have to remember he's a member of the committee, and
right.
It's, you know, exceptionally rare that the chair of the committee doesn't know what the vote count, what the whip count is, if you will, when he's going into the meeting. So really, he really is going to be a little bit stuck to do much of anything. Like maybe he can sound a little dovish to placate President Trump and just say like, hey, as long as all, you know, gas prices are up at $3.75, it's going to be hard for us to be cutting interest rates, right? I think in order to placate the president, he's going to have to mention something about inflation as opposed to the growth side of things, because that's going to be what the only way that he's going to be able to keep President Trump happy politically, I think.
Yeah, maybe he can just do a side meeting with Fed Chair Jay Powell, former Fed Chair Jay Powell, who has had to navigate it. Hey, Ira, we know you have to run. Thanks so much. Ira Jersey, he's Bloomberg Intelligence Chief U.S. Interest Rate Strategist. What is the factor of Jay Powell, Greg, being there also?
Well, it's definitely awkward, you know, lurking over. But I think it's to create some stability. You know, it's unclear. This is, you know, not a normal situation. But I don't expect Powell to take, you know, front-footed view and really be out in front. I think it's more in the background. As you know, he's been quite vocal that you know, this is Warsh's, you know, chairmanship. It's his Fed, so to speak, and so I don't think he's looking to disrupt that too much.
Yeah, and he's there until, you know, legally he's out of the woods, or he deems that he is.
Yeah. So that's the you know, going back to what Ira was saying, trying to please Trump is in direct, you know, contradiction of what the Fed itself and the institution is looking for. So it's a very difficult, albeit intractable, needle to thread, I'd say.
Greg, when you look at the fixed income market, and I'm just thinking about what the growth backdrop is as well. I saw the Fed Bank of Atlanta, the GDP Now index, suggesting GDP will now expand 2.83% in the second quarter versus 3.9% in its previous release. In terms of growth, if the war is indeed over, if energy prices start to come down, does it look like growth is on a better trajectory and possibly even better than this? Or what's the growth backdrop here?
I think the growth backdrop is quite good in spite of everything that's been going on. There's been a lot of so-called own goals that kind of hurt growth on the margin. But if you look at the fundamental backdrop of the U.S. economy in particular, it is quite solid, right? There's all this attention around the AI build-out. That is something that is, you know, insensitive to interest rates, right? It's, you know, 1% of GDP. You know, the consumer's still spending. It's K-shaped for sure, but by and large, the consumer's in a very good place. The wealth effect is, you know, contributing.
Okay, that's the productivity element. But I'm also curious about the labor market here, because anecdotally speaking, we have all the data. We get all the same data that everybody else gets. Mm-hmm. Anecdotally, you hear stories about, you know, a position opening up and literally hundreds of resumes. You talk to a hiring manager, hundreds of resumes hitting for that position in a 24, 48-hour period of time.
Yeah, that's largely anecdotal. We have to kind of push the anecdotal to the side. If you look at the broad macro, the labor market looks pretty firm, and it's firming. Right. I think the challenge that the Fed has for this easing type of bias that they maybe perhaps want to get to at some point is the strength of the labor market. Right. The labor market has seemed to kind of move from a softening, and you know, you're looking at an unemployment rate likely to go lower, not higher over time. So I think it's a real challenge. If you just look at the numbers, if you look at the data, it's really hard to construct an argument that rates should be lower here. from the Fed.
All right. So what does it all mean for fixed income? I mean, we just were talking too about all the debt that's being issued by AI related firms, NVIDIA doing it an issue. But I mean, it's just billions and billions and it feels like nonstop. And, it's these firms, tapping both debt and equity markets increasingly. I don't know. Do you see any risks, any concerns here? I mean, investors certainly seem willing to snap it up.
For now. So we have a quantum problem, and we're facing this massive crowding out effect and this decision. So not only do you have this tremendous quantum of debt coming through this AI build, you also have the sovereign, the U.S. government, issuing a lot of debt slated to pick up next year. And investors will have to make that decision of where they want to invest those dollars. So everything seems really quite good today. I think what investors are missing is the change in the supply and demand dynamics, as a lot of those investors who have been so comfortable investing in the markets now are getting pulled into their home jurisdictions, whether it's the Gulf states and alike. And so those sorts of funds are not going to be what it once was. So I think the market is focused on the here and now. What they're not properly calibrating, in my view, is what it looks like when the decision tree of AI-related debt and sovereign debt and, they both have to come, right? So it's,
That's fascinating. So there'll just be so much out there for investors to choose. 20 seconds, can we tell what might be the sure thing, the AI debt versus the sovereign debt, just really quickly?
No, I don't think there's a short thing. But I do think there's too much negativity around owning a sovereign versus a corporate. I will say that.
All right. Great stuff. You tie it all together. Thank you. Thank you. Greg Peters. He's co-chief investment officer at PGIM Fixed Income. And, of course, our Bloomberg Intelligence chief U.S. interest rate strategist, Ira Jersey. When we come back, wouldn't you like to own one of those privately held tech companies?
It's 2:40 on Wall Street. We do check markets all day long here. Bloomberg, the Dow higher. In fact, at a record. S&P, NASDAQ 100 index, all declining. This ahead of the Federal Reserve's first rate decision under Kevin Warsh. We'll have it for you live. The decision drops at 2 o'clock Wall Street time. And, of course, the news conference, 2:30 p.m. S&P right now down 22, drop there of just about 0.3%. Dow Industrials up 405 on the Dow, gain there of 0.8%. NASDAQ lower by 0.6%. The NASDAQ 100 index down 1.4%. 10-year 4.42% with a 2-year at 4.04%. Gold up 0.6%, 43.38 the ounce. West Texas Intermediate crude down 5.5%, 76.30 on WTI. Bitcoin down 1.1%, 65,748 on Bitcoin. Rivian Automotive shares are tumbling. We've got Rivian shares down now by just about 5%, cutting hundreds of jobs as part of a push to reduce costs while it rolls out a new line of EVs. I'm Charlie Pellet. Carol and Tim. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, Powerlaw Corporation, it's a closed-end fund that owns stakes in Elon Musk's SpaceX and AI firm OpenAI. It recently began publicly trading. The fund coming to market, capitalizing really on retail investors' clamor for exposure to the hottest private tech companies. They all want in. We all want in.
Do we?
I don't know. Maybe not.
The platform behind it is Powerlaw Capital Group. It's backed by Acadian Ventures, a San Francisco-based venture secondary firm, $1.36 billion in assets under management. We've got a great voice here to tell us more. Mike Dinsdale is CEO and co-founder at Powerlaw. He's former CFO of DocuSign, DoorDash, Gusto. He joins us from San Francisco. Also with us, the Bloomberg reporter who brought Powerlaw to our attention, Anthony Hughes, Bloomberg News U.S. Equity Capital Markets reporter. He joins us here in the studio.
All right, welcome, gentlemen. Good to have you here. Mike, let's kick it off. Tell us about Powerlaw, why the recent move to go public. And I am curious, why better to invest in a closed-end fund versus, let's say, now investing in SpaceX, now that retail investors, everybody, can get exposure that way?
Well, first off, thank you very much for having me. And to just play off the first part when you opened up, the answer is yes. I do think everybody wants to own Powerlaw. We are the first venture-backed firm to list a closed-end fund. And to answer your question around why not just buy SpaceX, I think people should buy SpaceX. I think it's a phenomenal company and will continue to grow for decades. But what we offer is other names as well. You mentioned OpenAI. There's names like Kelshi, Databricks, Kraken. And so our thesis has been that we want to provide a product that resonates with the $25 trillion in US retirement accounts that have been locked out of access to privates and the massive wealth creation that's been happening in private companies, we want to unlock that for everyone.
Mike, traditionally, when it comes to those companies that you mentioned, venture capitalists obviously have access to those, and the investors who invest in those venture capital firms. Also, wealthy individuals who may be accredited investors, perhaps they have access through their wealth managers to like a, allocation of alternatives that include secondaries or investments in some of those venture firms. Do investors in Powerlaw have to be accredited investors, or can anyone buy into this?
No, I mean that's really what we were trying to solve for. That you're talking about the accredited set, but when you look at the U.S. population, and it's even more globally, about 90% of U.S. households are cut out of access to private companies because they're not accredited, so they don't meet that wealth threshold. And our vision long term is to build products that allow anybody to invest, no matter what their net worth, no matter what their portfolio size is, but to be built into their retirement savings and into those plans and give access to private companies. This is our first fund. We're going to continue to launch subsequent funds to give access to different pockets of technology, but always focused on giving access to private companies, something that we've been building a firm for 16 years to gain access, and we think that it should open up to all.
Yes, Mike, it's Anthony here. I think one of the interesting things about the closed-end funds, and it's not just your fund, there's been several others that have listed recently, and there's been a few around for a few years, but the trading's been quite volatile, I think, around the SpaceX IPO, and I think your fund and others have traded at pretty big premiums or premium to the underlying value of the assets. I guess I just wondered, how do you look upon that? Is that how do you explain those big premiums? And I think a fair degree of volatility as well.
Yeah, I mean, there are a couple of other competitors, and when I look at our competitors, our differentiation is we're venture capitalists. We've been investing in technology companies. I've been the CFO of some that you mentioned. We're different in that we're not just looking at the obvious names, which are the big names that we're all talking about, but what's next as well. And so how do we build portfolios that gives access to the companies that are going to be the big megas over the next 5 years or 10 years? And so we're focused on that and making sure that our portfolios are balanced. Our competitors, in sort of our estimation, we have respect for all, but we're the first institutional venture-backed group to do this, and we think that gives us a real advantage.
And Mike, I think perhaps around $100-200 million of your portfolio is actually in SpaceX. I mean, now that the company's public, what's your intentions for that holding?
Yeah, I mean, ultimately, our value to our shareholders is to provide access to private companies. So as the lockup comes off and we have an opportunity to liquidate that position, we will do so as long as it benefits our shareholders. But ultimately, our goal is to reinvest the capital into more private companies because that's the value we provide to our shareholders.
How do you define beneficial to your shareholders? Because a lot can happen between now and when the lockup periods expire.
Sure. I mean, I think you started off by saying everyone can own SpaceX, and certainly they can buy it now in the open market. And so at some point, just the value we're providing goes away. So yes, we're providing a balanced portfolio of other names, but the actual value prop that we have as a firm goes away as we're holding public equities. And so as companies in our portfolio go public, we will look to sell them down over time so we can reinvest and have what we believe will be bigger returns from private companies that they may have heard of or may not. But at the end of the day, our goal is to build a portfolio that increases in value and gives access to private companies, something that we're uniquely positioned to do here in San Francisco.
But Mike, if SpaceX continues to soar, will you be, if it's in the benefit of your shareholders to hold on to it, would you, or your investors, would you hold on to it?
I mean, the answer is absolutely yes. We can hold public equities. And so we would assess that. And if we think that it makes the most sense and it's the best gain, then we would do that. But at the same time, I do think, again, our value is to give access to privates. And so we always look to that first and then make the right decision based on where we think the value is long term.
So Cursor is getting bought by SpaceX. We have potentially an IPO soon from Anthropic, another one from OpenAI, potentially more on the horizon. Is the pipeline after all of these IPOs and acquisitions strong enough to maintain a solid portfolio of private assets?
Oh, absolutely. I mean, I think that we all focus on the big megas, which really are the three you just mentioned, SpaceX, OpenAI, and Anthropic. But think about companies like Databricks and Stripe and some of these others that really are hundreds of billions of dollars in market cap today. They will eventually go public. And then when you get down below that, I mean, there's hundreds of companies that we're looking at and tracking and considering for our portfolio. And Powerlaw, to be clear, is what we believe best of the best big tech. And our thesis is around concentration. And so our goal is to have 15 names only in that portfolio. But as we launch subsequent products, we'll focus those on other areas that we think matter, like AI, defense, space, things like this, that are starting to emerge. And there's the next batch of those companies coming that we're tracking, and we'll add those to future funds.
Now, Mike, just back on SpaceX, I mean, what did you think about the debut of SpaceX? Were you surprised about how well it's gone? I mean, it really has, after a really large valuation increase in private markets, it's also managed to attract a big valuation in public markets as well, a higher valuation. I mean, were you surprised by that?
I'm really not. I mean, I've been a big believer in SpaceX for a decade. And I think that Starlink and the unlock that provides to communications globally is really underestimated. I mean, it really is a stair step, and SpaceX as a company is a one of one. So I think it went as well as I expected, and I think it will continue to go up. And it is something that I think people should hold for 10 years. And I think it makes sense. I intend to myself.
How important was it for your company, Powerlaw, to actually list prior to the SpaceX IPO? Was that strategic in terms of the timing?
It was certainly something we were focused on because it made sense for us to list before SpaceX, and they kept bringing in their IPO, which was challenging for us. But yeah, it made sense. And I mean, again, like our value prop is to provide access to those companies before they're public, and so we were working hard to make sure that we did go public or list before they went public.
Mike, you mentioned some of the other companies in the portfolio. I'll go through them again: Databricks, Stripe, Deal, Callsheet, Kraken, Tether, Perplexity, Canva, Rippling, Figma, Waymo, among others. How does a new company get into the portfolio? What's sort of what are the rules that exist in an environment where I think a lot of people would argue there's not a lot of transparency?
Yeah, so I mean, our heritage is a venture firm, and so we have a robust underwriting process, and we're very disciplined about how we evaluate companies. And we try and build a portfolio that has the big megas, which we've talked about, but then also has companies that perhaps people have not heard about, like companies like Saronic or Colossal Bioscience, which you didn't mention, that are doing really interesting things. And so we're always evaluating to have a balance across the big megas, which I think are somewhat obvious, and then going down into the what's next, what's coming up, and making sure we have a portfolio that has companies in it across those different stages, because I think that's where you get outsized returns.
And Mike, I think I mentioned before that a lot of the closed-end funds, including yours, are trading at a premium to their assets. I mean, do you feel like the closed-end fund sector, as it were, could be would be able to does plan to raise further capital in the future? Do you think that will be something that a lot of closed-end funds will do?
I mean, 100% I do. I think there's a structural shift happening with venture overall, and I think we're going to see a lot more of these closed-end fund type structures as we head towards embedding them structurally in retirement accounts and eventually into 401k. So there's just no question there's benefits to invest in privates through this model. Even as an accredited investor, it makes sense to invest in models like Powerlaw, because once we're trading, now you have full liquidity versus in venture. If you look at the trends, we have half the number of public companies that we did 25 years ago. Companies are obviously getting much, much, much larger. We have 3 essentially that are trillion-dollar companies and still private. And so you want to have access and have part of your portfolio in those privates, but having built-in liquidity in the public markets makes sense. In terms of the premium, that's just straight supply demand. There's a massive amount of demand for these names, and we have very limited supply, and that will change over time. Our goal is to have a fund where investors make money. So we don't want a massively volatile fund. We don't want our stock price going up and down. We want to continue to put up returns for our investors over time and have a stock that investors can own for a decade.
Yes, and Mike, a lot of your holdings are via special purpose vehicles, and I think Bloomberg has actually written quite a few articles about some of the issues in that area and some concerns about the transparency and fees associated with those sorts of structures. How much of an issue has that been? We haven't heard a lot about this issue since SpaceX went public, but is there something to play out there?
I mean, I think it is, and I think that the press around this and things that Bloomberg's done make a lot of sense to make sure that non-professional investors that don't necessarily have the same underwriting capabilities don't go into vehicles that they don't understand. In our case, we've done almost 900 secondary transactions. We're comfortable with all types of transaction SPVs, we are certainly in SPVs. About half of our deals are in SPVs in the Powerlaw fund, but we follow through. We only have SPVs that are audited. We follow the trail through to the cap table. And so our underwriting process protects us. I think all the warnings we're seeing from companies and articles that are out there are all around protecting investors that are not professionals, that are not sophisticated, that don't have an underwriting process that's robust like ours.
Hey, Mike, one last question. Just got about 30 seconds. You've been CFO of a bunch of large publicly held tech companies, including DocuSign. What do you see as the biggest challenges facing SpaceX as it transitions to the public markets? Just really quickly.
Yeah, no, I think for SpaceX, it's bringing together the different companies. So bringing xAI in, obviously X is in there as well, and then just the different businesses and making sure there's focus across on those to expand SpaceX overall. But again, I think it's an asset that's a one of one, and I think it's a phenomenal company.
All right, good stuff. Stay in touch. Mike Dinsdale, he's CEO and co-founder at Powerlaw, and our thanks to our Anthony Hughes, Bloomberg News, U.S. ECM Equity Capital Markets reporter, who brought us this story, and it's why we're out here talking to Mike. Thank you so much. Really appreciate it. All right, folks, let's get back to the markets because a different trade from what we saw yesterday, Tim.
Yeah, the S&P 500 down about 0.3%, just off of session lows. At highs today, it was up more than 0.1%. Taking a look at what's actually moving in the industry group today, information technology, the worst performer, energy down 0.5 percentage point, healthcare down fractionally. You got financials leading the way, industrials, utilities, communication services, and materials, Carol, all in the green.
Yeah, I'm watching WTI crude. It's right now down about 5.5%. If I go inside the S&P 500, we reminded you yesterday, even though it was higher, you had kind of an even split in terms of winners and losers. And it's kind of the same story today. Even though the index is slightly lower, you've got about almost 300 names in the S&P 500 gaining ground on this Tuesday, about 212 to the downside. So it's just a reminder that there's a lot going on internally, even though the indices might shoot in one direction or another.
Bitcoin just shy of $66,000 at 65,800. It had a great day yesterday when there was a big risk-on rally, down today just about $700. Interestingly enough, Carol, it really hasn't participated in this widespread risk-on rally that we've seen over the past couple of months.
I'm Carol Master along with Tim Stanovic. Let's take a look at some stocks on the move today. With us is Bloomberg News equities reporter Avalon Purnell, and we've got to start with the stock that we cannot stop talking about, and it's only been trading for what now, 3 days?
Yes.
Not even 3 full days.
Exactly. I mean, that's SpaceX, ticker SPCX, currently up about 8.4%, which again, that's for, as you said, it's the third straight day after its record $75 billion IPO. And worth noting that the gains are putting the stock on track to overtake Amazon in value, and also briefly made it the world's 4th largest stock ahead of Microsoft. That being said, part of this is because of retail traders, which have been a key driver of the hot start, buying as much SpaceX stock over its first 2 days of trading as they purchased across the entire U.S. stock market. Also worth noting that options trading for the rocket stock began today and has already drawn record volume.
Hard to find prominent bears on this. Like, there's some people who argue with the valuation. We had it featured Scarlett and Tom's interview with Jim Chanos last week on Bloomberg Money, noon on Fridays. But yeah, a lot of people we speak to, Carol, they are all in on this.
Yeah, totally. And we should point out it actually has overtaken Amazon's market cap, which is kind of interesting. But we're waiting to see. It's kind of getting nearer to Microsoft's market cap. So it's just kind of wild. The superlatives continue. Again, it's already the story of the year. I think I can just put that out there, or one of the main stories of this year. All right, let's flip on over to Netflix.
Yes, Netflix, that's ticker NFLX, currently slipping about 3.9% to hit its lowest intraday level since February. And that's after Semaphore reports that the streaming giant lost out to Fox in its pursuit of Roku. Worth noting that the report also says that Netflix is one of the number of companies interested in buying Lionsgate. But this isn't the first time that they have lost out on a bidding war, to say the least.
Wait, what? Netflix was in a bidding war? Oh, I didn't know that. No, I know. It's interesting, though. It does sound like they're on the move and they want to add something, certainly, to their business.
Okay, so I just want to remind everybody, almost 20 years ago, Roku was actually created inside Netflix.
So how wild is that?
With Anthony Wood, who is still the founder, chairman, CEO of Roku. So things have kind of gone full circle, although now he's going to Fox and he'll be part of management there.
Oh, my goodness. All right, let's talk about Moderna. I just think about during the pandemic, this was an all-star for a serious reason, of course, but it's had its ups and downs. But it's been on a tear this year.
It sure is. I mean, currently that's ticker MRNA. It is up about 9% today, most intraday since May 8th. And that's after the FDA released briefing documents on its vaccine, its flu shot, ahead of a crucial advisory committee meeting coming up this Thursday. Jeffrey's writing that the documents do read very favorably for the vaccine and potentially could mean that it could get approval, which would obviously be great news for Moderna.
Yeah, and they just did some reorg too, right, to get ready for pipelines. I think the president having more responsibility. But yeah, what an outperformance! It's the number one gainer in the S&P 500 today. Who'd have thunk?
Well, it should be one of your gainers later, Carol.
Funny that you say that.
Oh, okay.
Avalon, thank you so much. Avalon Purnell, she's Bloomberg News equities reporter with our Stock Movers podcast. Check it out, 5-minute episodes, big winners and losers. You can find it on Apple, Spotify, or anywhere you get your podcast.